Everyone, and thank you for ULI to put this webinar together. I'm Christian Charre. I'm with CBRE. We are the largest commercial real estate company in the world and a public company. My specialty, I'm based in Miami. My group, we focus only on the hospitality product. So CBRE may be known for various type of real estate, selling offices, leasing offices. But my team and we are absolutely focusing on the hospitality industry. Furthermore, the Caribbean for us, being an intermediary in transaction in the region, represent about 50% of our business. In the last 4 years, we transacted about 1.2 billion just in the Caribbean. So it is a region we love. It's a region that we spend a lot of time. We know many of the island. We interact with everyone on this panel. And it's definitely a love that we have for the Caribbean. In my previous life, I did work in operation. I lived in the Dominican Republic for a while, and I live in Antigua also. So it's dear to my heart. The Caribbean is a place where I want to see the islands thrive, or business thrive, and uplifting the economy of all this country really relies a lot on the hospitality industry. So it's a labor of love and passion for the Caribbean who brought me to Miami and work in this region.
Christian, this is just very well said. I think what has come through is that we are a truly international group of individuals. Merci, bonjour, y gracias for everybody. We've got representation from the Cayman Islands, from St. Thomas, from Tortola, from Puerto Rico, Dominican Republic, Dominica, Turks and Caicos. I mean, it's really about, it's a global experience.
Yes.
And we've heard different points of view. We've heard capital, we've heard operations, we've heard, looking at, transactions from the, from the ownership side. Are deals getting done in the Caribbean? I mean, what's the transaction environment look like today? Good
question. I mean, if you would have asked me that about 3 months ago and tell you that all the markets would have closed and we would be where we are today, I would have never picked the Caribbean to be the first one to market transactions. So as Nick said, I mean, the big difference between the GFC and today is there is a lot of capital floating around. And having this capital, as opposed to, the GFC, we saw the bank disappear. There was a lot of pain in the capital market. In this case, the outside, I guess, issue of the virus just came from nowhere, or from China, and took us by surprise. But the capital and liquidity was very much there before the virus. So this liquidity is still there. A lot of capital is chasing. They were tooled and looking at more, distress opportunity and try to place their capital. But the good news is there is capital floating around, and the Caribbean is not immune, and I suffer like everyone else. But there is still interest from a large, for people interested in the Caribbean, there is interest. And, all the transactions we're doing between the US and Latin America and the Caribbean, the first closing we had was 2 weeks ago with a transaction of selling the Jewel Dunn's River and the Jewel Runaway Bay for Playa. Playa was our client, a public company. They decided to go ahead, even amid the virus, to go ahead and entertain offers. And very quickly, the players in the region came up, and we're very quick to take advantage of the situation. So our transaction happening in the Caribbean, yes, we have another one in the Bahamas where we are put under contract, and there is a discount. So I can share with you in terms of metrics that if you were looking before, in general, if you were looking before pre-COVID and pricing after COVID, in the Caribbean, transaction getting done all cash because financing is still very much difficult. The Caribbean is always difficult in terms of financing, but the COVID added on a layer of difficulty there. And we were able to transact these two properties as the same as in the Bahamas, which is under contract, and looking at offers on other property that we have. We are marketing property in Anguilla, we're marketing property in the DR. The overall, I would say, discount in the region is 30 to 35%. So, and you know, for buyers who have the cash, you know, cash is king in this difficult period, and it's not like the normal transaction where you get a lot of due diligence and a lot of time to close. The winner of this kind of transaction are very quick. It's like within 30 days or less, they can come up, write a check, no contingency, and buy the property. And why they can do that is because they're compensated by saying, hey, as Nick pointed out, I'm getting a discount to replacement cost. I know the tourism is going to come back. I know people are going to travel again. And I'm taking the opportunity to buy something all cash at a discount. So there's, you know, the risk factor is diminished because your base is so interesting. As Nick pointed out, you know, you can wait 5 years, but you feel very good about the basis and the replacement cost of what you bought.
When do you really see recovery coming back to the Caribbean?
Talk about terms recovery, we need to define recovery. I mean, I think if we're looking at when do we go back to 2019, which was a record, by the way, a record year for the Caribbean. 31.5 million people traveled to the Caribbean in 2019. It was the biggest year ever. So when do we go back there? I mean, I think I agree with Alex, you know, probably 2021 will be, you know, marginally profitable with 50% of the business we have in 19, but I think 2023 is probably the year when we see the business being back to the level of 2019, assuming we have a vaccine, assuming we don't have an outbreak, assuming that the airlines are traveling back to the islands. The good news is, in some ways, there is some opportunity in the Caribbean is many of these projects are not over leveraged because Caribbean traditionally has never seen the kind of leverage you get in the US, you know. So there's still equity. I mean, even if you go down 30% in value, financing is usually 50%. So you still real equity for an owner in their property. So I think what we probably should announce is, you know, they finding rescue capital. You know, it's better to bring somebody with some returns and save your asset for in the short term than to let it go and give back the keys to the lender because there's still equity. In the US, you have higher leverage. You know, in some situation, you do have all the equity has disappeared, and really the lender is the owner at this point. But in the Caribbean, where I see all these hotels with lower leverage, I think there is still very much equity into their deal, into their operation, into their assets, and they should do everything possible to keep the asset and find capital to carry them over for the next couple of years.
And this was a question specifically targeted at Christian, but anyone can answer. Christian, you mentioned that this 30% loss of value, the distress assets, and the question is the loss of value of 30% related to distress assets, or is it lower NOI and higher cap rates?
Well, hotels are reopening, the island are reopening. These discounts going to diminish, right? I mean, people are going to do, okay, I'm open, I can cover my costs with 30-40% occupancy, and that will solve a big portion of it. So it's at that particular moment, people, I mean, you always have this equation, people or investors are taking advantage of what's happening now. And it's, the buyer and the seller have to meet somewhere. In the US, there's, very, very, no transaction because the bid and ask is still, there's a delta. So the market is not so much different as the Caribbean. Buyers are looking 30 to 40% discount. But the seller, on the other hand, they realize there's a discount, but they're more in the 10 to 20% range. And the lender are the same. So there's still a pretty big delta between bids and ask. And is why no transactions are occurring, because there's still this delta between what people think they should be paying and what sellers think they should be paying.